Let's get to it now, get some analysis. And for that, Peter Maguire, CEO of Trading.com here in Australia, joins me now. Peter, welcome.
Good morning, Nadine.
That's a lot to digest.
A lot. That's, absolutely. 35% in a week. What happened overnight, in the sense of this morning's trade, $20 up, big move Friday. And it's pretty hard to actually inhale it and just get a feel for it, because we've always been saying once it hits 90, it's off to the races. We heard what Qatar said. It has so many flow-on effects. Japan, big importers of crude, 90% as far as energy. Taiwan, South Korea, these absolutely monstrous economic powerhouses are now going to have to vie for oil, and it's going to be a spot market that's the highest bidder is going to win.
Do you recall seeing such a swift move in the price of oil?
Probably back to, say, 07 sometime when it hit 148 and the middle of 08.
Which was GFC.
Yeah, GFC. When you see $30 on 80, because it was 80 on Friday morning when it opened, and now it's Monday. Really, it's only one session because we haven't had the full session here. $30 on 80 is monstrous. That's 40% move to the upside, and that may be just the start. You might be at 115, 118 by the end of day. And this is where those big moves really capture. I think market sentiment and volatility is the name of the game.
Yeah, and so we were just talking in our stand-up in the newsroom out here that, it's the price of oil. Yep, it is, to your point, those countries that have to import for their energy needs.
Sure.
But it's also the flow-on impacts of that Strait of Hormuz being closed. It is diesel costs for farmers. It is fertilizer costs with urea going through that strait. And these are impacts that will be felt even if, and hopefully this war ends this week, it'll be 6 months, a year down the road where it's still likely to be an inflationary pulse.
Absolutely. And this is what Qatar said over the weekend. They're saying it's going to take many months for it to get back online. Now, the longer it's shut, we understand, the longer it goes on as far as bringing those prices back down and the effects across supply chains and all of the linkages associated with farmers. So you now need cheaper fertilisers, because this is the time as far as planting in the Northern Hemisphere. They've come out of winter. You're looking at your planting season starting in March and April, and now you're paying a premium for those fertiliser costs. So the impact is going to be felt on Main Street dramatically, and that's the wallet and the purse buying the finished goods come at the end of the season.
Yeah, it is. The puzzle pieces, the second round impacts are going to be massive. So when we've got oil at $125 a barrel, we are unlikely to see equities perform well, correct?
Correct.
So what are you expecting in terms of equities?
Well, you saw, I'm just making some notes here, the futures are down nearly 1.9% for the Dow. The market shut down, as we know, Friday night, and then this is the futures market waiting to see how these impacts are felt over the business day of Asia. Asia's going to be well down. I think you're going to look at, as far as the Kosdaq, keep a close eye on that, and of course the Nikkei, and the impact that has to all of these moving parts. So I think it's going to be generally softness. US dollars had a bit of a hit to the upside, up at 99.41, and don't forget what the VIX did. It was up 24% on Friday, so that's a massive move. Just so you could see the VIX back up in the States, maybe even a 40 handle.
Yeah, it is unreal. So we've had Iran naming Khamenei's son as the new supreme leader. That's helped to put the legs under the price of oil, the rocket, I should say, under the price of oil. And as I mentioned in the intro, we had that jobs read in the US on Friday, which also spelled trouble for the US economy. I mean, we're seeing stagflation being mentioned more and more and more.
Absolutely. That was a very soft number, and that wasn't what really the administration wanted to see, but they're the numbers, and the numbers are the numbers. So as you mentioned, if you see this spike as far as inflation, which would be from 120 to 150 crude oil, and how long it's there for, and it could be there for a matter of months, who knows. We all hope that this comes to some sort of resolution this week, but the way it's looking, it seems to be very much bedded in. There doesn't seem to be, softness in the undertones of saying, if crude was now at 70, I'd be saying, Nadine, it's well and truly over. It spiked to the upside and spiked up aggressively. So that tells me that this is a work in progress, and this could go on for many weeks to come, and the impact to the economic system would be immense from an inflation, and that leads to your stagflationary concerns: high inflation and very soft growth.
Yeah, and you know, we get an inflation read in the States this week, so that'll give us some sort of indication. How has gold been performing in this environment? Because you mentioned that, you know, the US dollar is very much retaining its safe haven status, coming to the fore as the safe haven play. We saw gold rising after that US payroll report.
Yeah.
But I think it was the first weekly fall for gold in 5.
Yeah.
Why has gold not really gone off to the races as a safe haven play?
I think a couple of things. I think possibly margin calls. And people are looking at, you know, diversifying and seeing where the opportunity is, and markets have really rallied strongly as far as open interest for crude futures. So oil has been very much a part of that attraction. And when you've got a market that's up 40% in a week, it's pretty hard not to say hello. Also, US gas futures were up the best part of 50 or 60% last week. So that's where a lot of smart money is traded. Gold's oscillated. This time last week, it was around about 52.40, I think. It hit 5400 in the afternoon of Monday. Now it's back at the best part. I've got a note here. What is it? 51.30. So it's very, very much range bound. There's only so much money, and I think probably the futures market is taking margin calls and appreciating where the opportunities are. And if a market's got a really tight range, you don't look for that market. You look for where you've seen the breakouts, US dollar, and of course crude oil, and they've been dynamic. And you'll probably look at shorting a number of those indexes today.
So Peter, what sort of a mind frame do traders need to be in when we're seeing war in the Middle East, war still in Ukraine, war in parts of Africa, when we're seeing all of these really strong market forces? Obviously breeds opportunity for some, but you've got to keep your cool.
Absolutely, don't get greedy. There's always the next session. Be conscious that you're not a robot. You don't trade 24 hours a day, and that's what can happen, that people just get really sucked into the vortex of it. If you're going to be specific and trade Asia, trade Asia. Or if you're going to, this is if you live in Australia, that is, if you like trading the Eurozone, trade the Eurozone. Or if you like being up all night, trade the US markets. But you can't trade 24 hours a day. You're physically impossible, because you make poor value decisions off exhaustion. And don't chase. The market's always open tomorrow. And when you see these big breakouts, be conscious of what the upside is and have a set of parameters. Why you enter a trade? Why are you doing that? Because I think this is going to happen fundamentally, and you have 4 or 5 key points that you're putting your hard-earned money down for a return. And you have to be diligent and really, I think, appreciate your own risk profile.